The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Money Masters Show. I'm your host, Steve Rhodes. Thanks so much for joining us on this New Year's Eve edition of the show. Our call-in number here is 877-927-6648. For those of you listening on the radio or maybe your mobile device by using TFNN.mobi, you can always catch an archive of this show on Channel 10, or you can watch it streaming live to you. Just go to the homepage of TFNN.com. On your right-hand side, you'll see a little area where you'll see some little cell phones, little cordoned-off area on the right-hand side of the chart. Click on that. You'll be able to catch this show streaming live on your mobile device. Right now, as we come into these markets here, the Dow is up 12 points, the S&P up 5, Composites up 20, led by Apple. Apple having a nice bounce here this morning, up 15 bucks, trading out at 524. That's up 3%. So that is moving the markets. Just one stock, really, that anyone has to focus on if you're trying to hold the markets up. And I'm not saying somebody's trying to do that, but it is one stock that you want to be paying attention to. Other stocks here this morning, Intel is flat, really totally flat here. I'm sorry, Microsoft is flat. Intel is up 19 cents. Google's up 4 bucks and change. Cisco's up 3 pennies. You've got Apple leading the charge, up 14 bucks. Google right behind that, up 5 bucks. Duff and Phelps on a buyout, they're up 19%. That's up 250. Netflix up 240 this morning. Rand Gold, GOLD, up about 2%. That's up 2 bucks. Chihu, I believe that's how you pronounce it. QIHU up 6% this morning. That's up $1.82. Sherwin-Williams painting the town green today. SHW, that's up $1.67. To the downside, you've got Calm, Cal-Maine Foods, that's off 8%. That's down 3 bucks and change. Watson Pharmaceuticals off 3.5%, down 3 bucks. Magellan Health Systems off 2 bucks. You've got EQT Corp down 97 cents. Lockheed Martin off 77 cents. Our call number 877-927-6648. If we take a look at the Apple monthly chart, that's what I've got on my screen. If you're watching us on Tiger TV, does this stock chart here look bullish or bearish to you? How does it look on a monthly basis? Because forget about the intraday, forget about the daily time frame. What right now you've got Apple is trading into the bar here of February 29, 2012. The top of that bar is 547.61. Apple trading at 522.93 or so. That bar had 405 million shares. As Apple has come down into it so far, and obviously we'll have to add to it today's trading, probably about 15, 20 million shares. Should end up with about 430 million shares. If it closes inside that bar on a monthly basis, no reason for it to not go down and tag the low of that, which is 453. Actually, I think would go much lower because it'll be breaking a bunch of support when and if it goes down there. I think it's more like when, not so much if. That is the monthly chart. If we go take and you can see here bearish, you got this nice little doji candle here. You got the confirmation of this reversal, actually kind of a morning star or evening star candle formation. So that is a bearish candle formation out there. If we take a look, and that's on the monthly chart, a longer term chart is going to give you better signals than a weekly, than a daily, just to give you longer term signals, I should say, not necessarily better signals out there. As we take a look at Apple on the weekly chart, does this look bullish or bearish to you? This looks even more bearish than the monthly chart does. So it gives you really a perspective as to what the actual equity is doing. It's why you should always pay attention to multiple time frames. Don't get locked into just one time frame because there's plenty of information to be offered to you elsewhere. If we take a look at Apple, take a look at the down thrust that Apple had the week of December the 7th out here. The close of that session is 533.25. Apple can't even get up into the close of that area. It just simply had a sideways sideways move here, and of course, as it has come off of the most recent down thrust here, again, it is at December 7th level, just moving sideways. This does not look bullish to me on Apple. Yeah, it's having a nice little move of up $14, but don't get sucked into it, folks. Yeah, bullish signs will be clear. This is not a bullish sign whatsoever. That's the weekly chart. Now let's go over, take a look at the daily chart out here on Apple, having a nice move out here. But again, you know, on the here's the candle. In essence, we're taking a look at December 5th. You can take a look at that candle. That low is 538. That's got 37 million shares out there. Hasn't been able to come up into that level. Really trading inside the hammer candle still. The hammer candle is November 16th out there. That's on the daily chart. Nothing more than really a sideways move, building cause at the bottom to do what? To go lower, to go much, much lower, could be several $100s lower. Again, if we take a look now, let's go ultra short term. We will just simply take a look at the 5-minute chart out here, 5-minute chart. And if you were listening to the 9 o'clock show, we were watching Apple as it opened. We were watching it get into the oversold territory, making a little spike, nice little spike high right here at the 10:05 time frame. As we were coming on, gets up into a relative strength reading of 80.86. 70, folks, gets you into oversold. 80 gets you into the extreme oversold area. On the 5-minute chart, a little bearish engulfing candle at the 10:10 session. Looks like we're having a little bit of follow through here to the downside. So even though there are times when you've had an equity maybe take off in the morning and something that you perhaps wanted to say, should I get in on this thing? Do I want to chase that thing? Just simply utilize this indicator here because it will help you. It will save you money. It will make you money out there. It will help you identify intraday when you should buy in or when you should be selling something out there. Always works, folks. If you don't believe me, put out any chart you trade and go back to the left-hand side, get as much data as you can. In my case, just to prove it, I simply use the Dow going back to 28 actually, because that's the data that I've got, and went back and saw that it's just simply been working beautifully ever since that time frame. So that's how much confidence I've got in utilizing that. Now, here's what I want to do. I don't think I've ever done this. I haven't pulled up my newsletter on a show out here, so I'm going to go ahead and do this for you because there's some educational things. There are things that are contained in my newsletter. First, they're not even on this system here. It's on a different system that I actually trade with, where all those charts come from. So I've got multiple systems out here. The front page of my newsletter is for those folks that want to know what to do. Just simply want to be able to open up a newsletter and say, okay, what is it that our current positions, and I've gone ahead and I've erased the current positions in our current buy list out there. I'm not providing you with that information, but just so you can understand how it works, I give you a long-term, intermediate-term, and short-term posture, I should say, is the word I'm looking for, posture of the S&P 500. So it's just simply of the S&P 500 out there. On Friday, my long-term and intermediate-term posture for the S&P 500 turned to neutral. Prior to that, it was bullish out there. Short-term, it's bearish. It's been bearish for a little while out there, and we currently have a couple of trades in there. So I give you all the information. We adjust the stops. We just simply take a look at what the average true range is on a daily basis. So what it is that I offer to you during the shows is exactly what it is that I actually use in real life. I would never ask you to do something that I myself do not do or don't put in practice each and every day. We do have a current buy list. It tells you what the projected entry is, exactly what the stop is, what our target is, what the current price in the newsletter is. More important, the risk tells you how much of your capital, your free trading capital, that you're going to risk. And then I make it real easy. I tell you, for every $10,000 in free trading capital that you have, when the equity hits our target area, you would buy X number of shares. In this case here, 60, 75, or 135, and also gives you the reward to risk. One of the trades we're looking at's got a 36-to-1 reward to risk ratio when it pulls back into that area. Another one has got a 14-to-1, 13.7. Another is 4-to-1 out there. So I do all the work for you. I also have a current watch list. So watch list, just simply equities that I'm taking a look at, does really the same thing out there. Gives you the position size. Something can move up from the watch list onto the buy list. And these are just some of the equities that I take a look at out here. What I want to get to is really the overview. So I start each day off with a overview out here. I don't know if I can enlarge this. We'll try this here. There we go. So enlarge this a bit here. And in each newsletter, it's really educational. So it's trading. It's obviously giving you trades. And by the way, so you've heard the commercial, and it says, "Hey, since I started the newsletter, it's up 100%." The reality is, it's really more than that. The S&P, since I started the newsletter, is up 6%, and I'm actually up 25% in the newsletter out there. So if we take a look at here, I shared this with you in the latter part of the first hour out there. So I was going to teach you something that probably nobody else has taught you. So I'm going to take a look. I'm going to enlarge this a bit here, and we're taking a look at the VIX. Now, there are many different ways to use the VIX out there. I'm just simply going to share with you the ways that I use the VIX. So you want to make sure that you use tools. Listen to folks, learn from folks, and then use a tool to your advantage so that it works for you out here. I use the VIX. There's a lot of people who talk about fear, that it's the factor of fear. I take a look at the VIX. When the market is moving down and the VIX is not moving up, to me that's just simply a sign of how much liquidity is in the marketplace. It has nothing to do with fear. It's just simply about understanding liquidity in the marketplace. And to me, it's a great indicator to understand if there is liquidity. If the market is moving down and there's liquidity, that tells you to be really paying attention for areas of a bounce out there. I mean, that's a great indicator out there in order to be able to use the VIX. I also use it on days where you have a substantial increase in percentage over the prior day. What I look for, my floor, is 10%. Any day, it could be 9.9%, but 10% or more of an increase in the VIX is very important to notate on a chart. On Friday, you had a reading of, I believe it was 6 is up in the newsletter. I just have to read my newsletter. 16.69% versus the prior day. That is the percentage increase. It shows up on your screen. Right now the VIX is down today, so the VIX is pulled back. Let me just find it here on it's down 7% today. But what I take a look at is the positive readings. I'm going to just talk to you about the positive readings out here. As you take a look at my newsletter, if you're watching this on Tiger TV, I'll just read it for you for those of you that are listening in. Since Friday's price action created a one-day VIX percentage increase reading of 16.69 versus the prior day's close. Plotted on the chart of the S&P 500 are days in which the VIX also had a one-day increase equal to or greater than 10%. It's important to pay attention to readings of 10% or greater because they carry with them an identification of either a one-day washout, a washout meaning prices moving down, which is what we saw on Friday, or folks, instead of a washout, this is just simply an initiation of a larger move down. That is what I suspect it is that we have going on. But all we have to do is sit back and watch. You just need to know what's out there, know that it's either going to be the sign of a washout or it's going to be the sign of in that case there, what we'd be looking at is the low of Friday being support out there and seeing a reversal, or what you're going to see is an initiation to the way down. I've identified just simply on this chart here, the ones in yellows are the ones that turned out to be initiations of moves down. The ones in green are simply moves up out there. That is on the VIX. Take a look at it every time that it's more than 10%. You want to be paying attention to that. You want to plot it on your charts out there. We come back, we'll go to Rick in British Columbia, then I'm going to share with you after that call, and maybe another call after that, I'm going to share with you in 2012 the best reversal signal in the marketplace. 877-927-6648. Dow's off 12 points. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back to the Money Master Show, folks. Dow is off 8 points right now. S&P is up 2. And let's go out to British Columbia to our man Rick. Happy New Year, Rick.
Yeah, you too.
Thank you. Thank you. Got any big plans for tonight?
Well, on behalf of all Canadians, we'd like to congratulate you Americans for solving your fiscal cliff problems.
We did?
I don't know.
Oh, you would like to be able to. Oh, I see. That's what you'd like to celebrate.
Well, you know what it is all these, senators, congressmen, it's Christmas time, so they're getting, they're on the media big time, right? So they're in the spotlight, right?
Oh, they are.
So it's putting a positive twist to things, and I don't know.
Yeah, my parents taught me a long time ago, if you don't have something nice to say about someone, don't say it. So I don't have a lot of things to say about any of our folks in politics. What upsets me most is that it's a great time for these folks to step up as leaders, and what frustrates me is many of them are misleaders.
Well, just from an outsider looking in, there's a guy, he's part of the tax group or whatever, Hover.
Okay, Lundquist, yeah.
And I mean, how a congressman can swear an oath to him is absolutely insane.
Hey, that's one of the reasons
absolutely insane. I mean, that is one of the craziest things I've ever heard in my life.
Yeah, it's
that really shows.
I agree.
And so that oath the right-wing Republicans are seems to be brainwashed or something, and whatever.
If we had term limits, guys like that would go away.
Oh, it's ridiculous.
You know, and of course we'd have people that really want to provide service unconditionally, want to provide service, would spend their 2 years, 4 years, whatever the term limit is that would be established, would go up there to do their deed. You know,
Yeah,
and if it was because they didn't go after it because it wasn't a career of plush stuff, then they were the wrong person anyways to be up there. So I'm on that camp that I don't know how we make that change, but I sure would like to make that one change. It would do incredible things for our country.
Anyway, I'm looking at Microsoft.
Yes.
And now I know Microsoft has a gap at 26 roughly,
Yes.
which it just hasn't hit yet. I've been trading it a little bit today. Like I got a buy on it today.
Yes.
Because I'm just going to trade it for a day trade or whatever. Because at least I haven't looked at the volume, but I got an order in at about 26.41 on it just for a bounce.
Yes.
If I can make 20 cents, I'm in and out.
Well, here, what I like about this chart, and it's really it's the second very nice potential trade setup, that you provided to the listeners here at TFNN. So thank you for doing that. What I like about Microsoft, you identified that gap from January 3rd out there, and that low, folks, is 26.39. Now, gaps eventually get filled out here, but what's really nice about a gap or an open window is when they hold as support areas. And that's in essence what it has done here. So it really sets up a great buying opportunity to do just as what you are doing, is to play, some type of swing trade. It could be longer than a day. And what's nice about it is that if you were to actually get a close on this below 26.26, you'd be out of the trade. It's a 26.51 right now, folks. So probably reward to risk is not too bad, because if it does, like Rick's talking about, possibly bouncing from here, this thing should at least trade up to the $27.49 level. Maybe it's $27 even, but most likely would travel right up to it's got a nice area of support and resistance. Got this little horizontal area, and so it becomes it's actually, so I like those windows, especially when they've been tested and they hold, Rick, because it really helps to identify where the bulls are at. And this was tested on November 16th. It was tested with a nice bullish engulfing candle on December the 5th out there, and so it's it's close to that range out there. So I'm on board with you. I think it makes sense.
And I'll let you go if you're busy. But I like the way you're starting to look at monthlies here with the end of the month now.
Yes.
And
yes.
I think one bellwether that we can really watch is BAC on a monthly.
Yes. Okay.
I think that's pretty clean. In other words, that thing should come back to $10. You'd think.
Yeah, it's been a nice. It has been a nice performing stock. The financials are the sector to be in.
Yeah.
The XLF or the FA, I think it's the FAS is the long one, on some type of pullback. But BAC has had a really nice move off of the lows for sure. And it's got, long term, this actually had a nice bullish crossover the month of September 30th.
But we took out last March, I believe, on lighter volume by a lot. And the high was 10.10 there.
Got it. I do.
Yeah.
Hey, Rick, Happy New Year to you.
You too.
All right. Be safe tonight, and I look forward to seeing you next year.
You bet.
Okay, take care. Dow is up 5 points. S&P's up 5. We'll be right back.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations, including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Dow up 12 points right now. S&P up 5. And I want to go back to the BAC chart here for a minute. And what I've got is the weekly chart up on the screen. So on the weekly chart, what we can see here is you can see this rising price channel. These are the red diagonal lines that you see inside the chart here on my screen. And in order to a price channel totally different than trend lines. And a price channel, you want to make sure that you're using co-located opens and closes. That means in this case here, when I say co-located, you're trying to find at least 3 or more touch points. You're trying to find as many touch points as you can. That's going to give you the strongest channel line. In this case here, if we start off with a low on December 23rd, the open, I should say, which is $5.20, that's really your first touch point. You can see here how the open of the week, we're looking at a weekly chart of May 25th, is really your next area. That's at 7:03, and it's the close of the week of May June the 1st out there. So it's a co-located open and close. And one week it happened to be the open, the next week it happened to be the close as the market moved down. The week after that is actually the open as well. It kind of makes sense out there. And so that's probably your channel line along the top here. It's not as well defined, but it looks like it's really this cluster of candles back in the March 30th area. So there's the rising price channel that BAC is traveling. In fact, on a weekly basis, let's just go ahead and put up the relative strength indicator. So because what we can see here is on a weekly basis, you can see where it is getting up into that over bought territory. So it suggests, hey, being a little bit cautious here. Now, what we're also taking a look at, what Rick pointed out for us, is that on the monthly chart, which also is true of the weekly chart, I suspect will be the same on the daily chart, what BAC has done is gotten over a swing point on lighter volume. And so the swing point that we're taking a look at is March 23rd, 2012. That's that $10.10 number that Rick mentioned. So that one had 1.9 million shares. There's a red horizontal line going across my screen. I'll get rid of the black one out here. I'll just change this red one to black, make it a little bit easier for you to follow along. So that black horizontal line going across the screen in the upper section out there shows that you've gotten up above a swing point on light volume. So it's not a confirmed A to B equals CD up, even though it's moving up there. And you've got BAC getting into the overbought territory on a weekly basis, which is even, weekly chart stronger than daily, monthly stronger than weekly. So in this case here, very possible that what you could see is a pullback inside BAC, and it is a nice looking chart out here. What you can also do is take a look at, because there's a number of patterns out here. If we come off of the swing point high from January 14th, that high was 1531 down to the low that was put in, which is the December 23rd, 2011 time frame. 1134 is the 0.618 retracement area. It's trading at 1143 right now, so it has another reason to actually pause up here. No bearish signal whatsoever on a weekly chart, and on a daily chart, what we saw here, or I don't know if we went to daily chart. Let's go take a look at the daily chart. No bearish signal out here as well on the daily chart. Yeah, your first one showed up. The bears showed up on December 19th, but the bulls took charge that very next day out there. So, you want to have patience. That was on Bank of America. Let's go to Max in Houston. Max, thanks for calling. Thanks for holding. How are you today?
I'm doing just fine. Good morning, Steve.
Good morning.
Happy New Year to you too.
Thank you. Appreciate it. Any kind of special celebration for you in Houston?
No, just probably a small party, a small gathering.
Small party, small gathering. Those are good.
Yeah, we got to work tomorrow.
Good for you. Well, bless your heart. So, bless your heart for doing that. That means you'll probably. Will you be to bed before the ball drops?
No.
Oh, okay. All right. Just a little blurry-eyed in the morning.
Still, yeah, it's going to be a slow morning tomorrow.
Good. All right. Well, you're going to miss some great football.
I know.
Yeah, been a ton of football on over the weekend, so I enjoyed Saturday quite a bit.
Yeah.
Max, you wanted to take a look at Facebook. Tell us what you're doing and how we can help you.
Well, I was, I said before when I called you, I'm trying to learn this, ABCs and
sure.
The way you and Tom look at things. And it looks to me that it's in an ABC up.
Okay.
But, with the weakness in the market, it seems to me like today it spent a lot of its energy trying to gap up, and it doesn't show a whole lot of volume today.
Okay. Yeah.
So, but when I do the ABCs, it looks like it stopped at a 38.2.
And now, so help me understand the ABC that you're creating out there, because there certainly is the large A to B equals CD. The larger one is off of the low from September 4th. So that low of 1755, the B point on the larger one that first shows up is, so you're trying to learn it, is the September 19th high of 2337, 78 million shares, does a pullback, it looks like it does it on light volume, pulls back to the October 18th low of 1889, and then you had a nice sign of strength out there, and it pulled back into the area where it broke out, and it did that on light volume, so that was also, a nice setup. So it completed the 1 to 1.618 A to B equals CD, and now it's pulling back. So now, help me understand are you trying to do an A to B equals CD off of the November 12th area?
Yes.
Okay.
And is that incorrect then?
Well, I don't know. So let's go take a look at it. No. I just want to make sure that I'm with you. So the pullback on Friday would be to the 0.382 level. Got down to 25.15. 24.98 would have been the exact number, but guideline wise, that would work. So that would work. And the pullback looks like it was also on light volume. So that is a possible A to B equals CD. Now, 0.382, buying a 0.382 A to B equals CD is a much riskier thing to do. You're typically trying to buy like a 0.618 level, or you'd like to see price come down as it's pulling back, come into something else that might be a stronger area of support. And, and what you'd be looking for is maybe a high volume bar. And so the ones that stick out for you would be like October 24th. But that high is 24.25. That has 228 million shares. And I'll draw a line across. You can see where that would be an area, potential area of support for you. It didn't actually move down there, and that isn't, that's not to the 0.618 level. The next area from a bar-wise where you have, quite a bit of support is going to be the candle of the November 14th level. That has 229 million shares, and that high is 22.50. So if you're trying to take, are you trying to take a long position now?
No, I'm just trying to figure out because the chart looked nice and clean for me to do on ABC.
Yes.
And I listen to your show when it comes, and
yes.
So I like I said, I'm trying to learn, and just doing some paper trades in my just
got it
just to figure out.
So let me give you the easiest way maybe for you to, because you've definitely identified a 0.382 retracement, and that could most certainly be setting up an A to B equals CD up. Now the cool thing about an A to B equals CD is if it only does a 0.382 retracement max, the chances are that when if it does confirm an A to B equals CD up, it'll do more than a 1-to-1.
Yeah.
So it increases your probability. And I don't know whether it's going to do a 1 to 1.272, 1 to 1.618, but it increases the probability of doing more than 1-to-1. So what you could do is you could take a look at playing this as a momentum play. And what that means is you would want to see it get above the B point of this A to B equals CD up, which is December 3rd. So I would say if Facebook crosses 2888, excuse me, on more than 123 million shares, that gives you a confirmed A to B equals CD up, a 0.382 retracement.
Yeah.
Excuse me. Says price ought to travel to 37.90. To me, I think that is the better trade because you're also up against, you'd be over an area of horizontal resistance out there.
Yeah, I understand.
Go ahead.
But what about it gapped up this morning at the open, and it doesn't seem to have a whole lot of volume. So to me, that's not a big sign of strength on this jump today.
So if we look at this, I'm going to take some things off the chart now. So first thing is take a look at the daily chart. So the high is 26.11 from Friday, and the low today is 26.11. So intraday it may have tried to gap up, but there is no gap out there.
Okay,
because it actually, it's closed that price point. There's no void of price in between two daily candles. But you are right, certainly on now if I put this on an intraday basis, do you look at 5-minute, 10-minute? What's the?
I usually look at it on a daily because I don't have the software that'll do that.
Okay, so I'm going to just put on a 5-minute here, but I have to refresh my screen out here, and let's see what we can find out about Facebook just on the intraday. So what it did do is this morning at the open at 9:35 had some nice volume in it. It did 3.5 million shares right at the open today. So even though on a daily basis it doesn't have the volume, if somebody were day trading this, you certainly got a nice. You get a nice volume spike right there at the open. And if I take a look at what that was going into, I don't see, here's what it was going into. It was going down into, in essence, a downdraft from 4 p.m. on the 21st that had 3 million shares to the downside. So it's 3 million shares to the downside, 3.5 million to the upside. Still more volume to the upside, so not too bad. But I think from a paper trading standpoint, what you would like to do is you'd like to try to find the 0.618 retracement levels to be taking a look at buying, or if you're going to do something on a 0.382 level, try to get that relative strength indicator down as close to the oversold area as it possibly can, or wait for a bullish signal or some volume. But on this trade here, potential trade, because you'd be coming over resistance area, it might make better sense to take this as a momentum trade if it gets above that 20 B point is 28.88 on more than 123 million shares. Does that help?
Sounds great. Yes.
Okay.
Very much.
All right. Thanks so much for calling and listening. Have a safe and happy New Year, and I look forward to seeing you or talking to you on the 1st, 2nd, or 3rd, or 4th of January. All right?
All right. Thank you.
Okay. So as you come back to the market, still relatively flat out here. So let's go take a look. Oh, I know. So now let's go take a look at the best, I'll share with you, the best reversal signal in 2012, period. And if it was the best in 2012, you might want to say, something to think about, because it could be the best in 2013. So I'm not going to go to my newsletter, and we got to go all the way down to page, I want to see what page this is on here. If I got the page listed here, I know that I do. So this is on page, the newsletter, got over the side, where is it? Page 36 of the newsletter. Now, you know that we take a look at, as a timing indicator, take a look at new moon, full moons. There's other lunar phases. I don't speak about them here on this radio program, but certainly they're contained in the newsletter. They teach you how to trade. In fact, it's one of the, if you traded the futures and you did not use this indicator, you're leaving a lot of bread on the table out there. And so I teach you about it. I do, in essence, one hour workshops every other week. Typically every other week, I do workshops, and they're all archived on my on your members page if you're a subscriber of mine. We're taking a look at the up in the skies. We're taking a look at Venus and Uranus. The Venus-Uranus cycles have been the single best indicator of reversals in the marketplace, either the upside or to the downside. Now, you know, we came off of those November 16th lows out there, and let me just find my cursor here. Why am I losing my cursor? It's gonna. There we go. So the November 16th lows, and what you can see, December 19th, the day of December 19th, when we actually made a high out here, that was the last Venus-Uranus cycle in 2012. That happened to be Venus trine. If you're watching us on Tiger TV, that's just the angle that we take a look at. There's 5 major aspects that we look at. We look at opposition, trine. We take a look at square, we take a look at conjunction, and sextile out there. And so I think I got them all. In any event, so December 19th makes a market high. We've seen a reversal ever since then. Take a look at the November 1st time frame. November 1st, 2012, you had Venus opposite Uranus. The market was moving up. In essence, that put in a high that held. How about on September 13th? September 13th, folks, you had Venus trine Uranus again. Again, it's just an angle. Don't get too caught up into that. But how about that for the black line going across the screen here happens to be the Bradley indicator out there. But the Bradley indicator has not worked that well. That's been inverted here, or you assume that it's been inverted. But what has worked well at identifying short-term, long more than short-term, changes in trend in the marketplace has been the Venus-Uranus cycles out here. Take a look at July 5th, 2012 out here. Identified a turn in the market. Take a look at the June 21st level as the market was moving off of those June 4th highs out there. How important was that? How important was it? You know, even myself, I like to learn something new. Folks, you want to have a great 2013? Do this one. I'll give you what you should consider using as your New Year's resolution. You make this resolution and you come back a year from now. It won't even be a year from now. 3 months from now, you'll just be blown away by what actually occurs in your life. You make this resolution, because this is an easy one to keep. Every single day, learn something new. Feed your mind. Feed your mind, because we spend a lot of time feeding our bodies out here, but what you've got to do is you really got to spend time feeding your mind out there. So if you make a commitment to learn something new, it could be in your work, whatever it is, and each day before you go to bed, write down on a pad of paper what it is that you learned new that day. And don't say, I didn't learn anything new today, and you're going to go ahead and learn 2 things tomorrow, because then it becomes 2 and then 3. But if you learn 365 new things next year, we come back next year, how much growth do you think you will have? I say extraordinary growth. Learn this indicator, folks. Go test out my newsletter service. We're only on page 36 here. You can try it, unconditional money back guarantee. 877-927-6648. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back to the Money Masters Show, folks. Relatively flat market out here. Dow's off 7 points, S&P's up 3, Composites up 16, small caps up 3.5, and we did have one listener that was not able to hold on the line. Want us to take a look at PEG. PEG is the ticker symbol out here. I've got the monthly chart up on my screen. You can see it opened up the month. It's trading right now at $30.04. Opened up the month at a price point of $30.09. So what we've got here is a little doji candle. I know he's looking to get in. Maybe he's already in the equity. The better buy on this equity, quite frankly, is a test of this August 31st, 11th swing point. That is where it is traveling within. That low is 27.97. The high is 34.19. Doji candle, I don't see any on the monthly chart. No bullish signs out here really whatsoever. You do have a, hasn't even tested the swing point, which it should test here, which is the April 30th time frame at 28.92. You can take a look at this on a monthly basis. I don't know if this is something you really want to be tying your money up into. This thing has been traveling in a sideways range since October of 2008. I think there are better places for you to place your money. It opens in October of the high in October of 2008 is $33.72. You've never gotten a close above 33. You did for 1 month here, closed at 34.13 in August of 2011. But otherwise, this is just a sideways consolidation move, and you got to be careful on these things because consolidation moves, folks, when they break, they oftentimes will break in the direction of where they came from. In this case here, this thing came from its own fiscal cliff, which was the high of January 31st, 2008, when it was up at $52.30, made its way all the way down to an untested high-volume low in October of 2008 out at the $22.09 area. So I would just simply suggest that you just look someplace else to invest your hard-earned capital out there. Let's simply go back. Let's go take a look at the indexes. I haven't done that here yet this morning. Let's take a look at the S&P 500 and take a look at where we're at here. The S&P 500 closing back through the 0.382 retracement of the move up. That's coming off a November 16th high to the high that was put in on December the 18th and 19th out there. $1,408, I believe, is the 0.382 retracement. You're at 1406 right now. This looks to me like it wants to come and test the bull sash candle from November 28th. That low on the S&P is 1385. I believe that's where the next piece of information is going to be released. I believe that is where the S&P is most likely headed to. And if we don't see any bulls show up from a candle standpoint, then you'll take a look at the S&P traveling down into that November 16th time frame. Any news that comes out, anybody who's waiting on some great news to ride aboard there, I would be taking a look at that news, folks, as a sell the news opportunity out there. Now, I have to wait and see how the market trades and use some indicators out here, but I don't think any news is going to be good news out here at all. Won't solve the overall problems, but this is not a political show. Just simply, technically speaking, the technicals are failing, and I'm sure Basil will cover that as well when he begins his show next. And then we have Larry Pesavento, because it is Monday, from 12 to 1, Daryl Martin 1 to 2, David White from 2 to 3, Ken Shreve from 3 to 4, and the Tom O'Brien Show from 4 to 6. Thanks so much for being here, folks. I do absolutely want to wish each of you a safe and happy New Year out there. Please make your resolution to learn one new thing each day. Write them all down, because it'll absolutely change your life, and it'll be a life lesson that you'll be able to pass on to everyone else. Thanks so much for being here. Thanks for making my 2012 an incredible year. 2013, the best is still yet to come. Take care and be safe, folks. See you next year.